Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hilal Dadia. We have with us Aalok Patel, Joint Managing Director at Arman Financial Services, joining in. Welcome to the show, Aalok. And as always, a pleasure to speak to you and get insights about what's happening in the industry.
Thanks for having me again.
Pleasure. Aalok, my first question coming to you is, how would you actually describe the first quarter of FY22, and distinguishing it from what's happened in FY21 as a whole?
Well, I mean, am I allowed to swear on your channel or no? I'm just kidding, but it was extremely challenging to say the least. So Q1 of 2020 was last year was mostly about the lockdowns and the loss of income. So I don't think everybody, whether the company or all of us had the health aspect of the pandemic had set in for most of us. So there were a lot of infections last year as well, don't get me wrong, but nothing compared to the pure chaos of the second wave. So we had so many of our staff members and our clients infected that pushing for repayments during the peak did not seem like the right thing to do either. So, it was a scary situation for people like us, somewhat, educated urban dwellers, relatively financially well off. But I did mention this yesterday also that, just imagine for a minute that what Q1 of 2021 would have been for an average rural microfinance customer with their limited resources, financial or otherwise, minimum education, minimum knowledge, medical infrastructure, access to medical care, you name it. And also on top of it, there was a loss of income due to the lockdowns. So really the list can go on and on. And the worst part is that when a client or their family member was infected, the first thought they had was whether it will put them in financial ruin and not their health or safety. So it's hard to really contemplate what a tough situation the rural poor had to go through in the past 18 months or so. But the silver lining, I guess, is that even during the worst month of the crisis, which was May, 3/4 of our customers chose to pay their EMIs, and nobody would have really blamed them if they asked for a repayment holiday or a moratorium or anything like this. So this really speaks volume about the resilience of the MFI customers and the rural customers in general. But yeah, it was a tough quarter, don't get me wrong.
Right. So overall, as you mentioned, it was a tough quarter. We did see that the collection efficiency was impacted. It fell to almost 89% versus that we had seen a 94 in the month of March. How has the improvement been from there on, if you have to take into consideration July, August, getting into September now? Are you seeing things improve, and do you think that's something which could be sustainable?
No, I think on a consolidated level, yes, you're right. It was about 94% in March. In April, when the second wave was just starting, it dropped to 88%. In May, which was the worst month, it dropped to 78%. And then, it was kind of a V-shaped recovery where it bounced back to 89% in June. July was only slightly better than June at about 90%, to answer your question. And the first 17 days of August are a couple of percentage points better than July, comparing the same period, from the 17 days of last month. But a lot of festivals in August, so let's see how we end up. But I always say that going from 75 to 85% is much easier than, say, going from 90% to 95%.
5%, correct.
So the good news is that the post-COVID disbursements, these are the disbursements that we made post-April of last year. These are all back up to 99% repayment rate. So that is absolutely surprising for me also, that it's performing so well. And basically it has a lot to do with the very conservative underwriting that we did post COVID in April last year. But basically it's the pre-COVID disbursements customers that were in some level of trouble last year, and we spent 6 months last year to motivate them and convert them into paying customers. These are the customers that have fallen back into issues. So with the theme that we've been saying,
Right. So overall, if you go to see in terms of the operating expenses, well, Aalok, that went up by almost 18%. Is this a one-off, or what is the reason for it, and when do we see that normalizing?
No, I wouldn't say it's a one-off. Primarily, this is a function of our growth plans during fiscal 22. So we had started opening a lot of branches in anticipation of the first quarter kind of being done with COVID and the provisionings and to expand. So we started opening a lot of branches in the fourth quarter last year. We expanded into Haryana, into Rajasthan. The number of branches and employees increased between 15 to 20%. So I think it kind of correlates to your expense increase. And plus, during the same quarter previous year, there were some cost savings due to the lockdowns also in respect to some of the incentive payouts to employees. So this is basically the normalized figure, and the new staff and branches will help with the future growth and collections.
Right. And from here on, what are the COVID-related provisioning requirements that we will have to make? Any numbers that we have worked out?
So we keep planning numbers, and things keep going a little out of whack. But see, we already have about 56 crores of provisionings available, which is 7.2% of the total AUM. And we have, on top of that, we have done a lot of aggressive write-offs during the last year and this quarter as well. So if the second wave didn't happen, I think we would have been done with the overall provisionings and it would have been business as usual. But that is, of course, a fantasy. The second wave did happen, and I really don't know what kind of losses to expect. I think a lot will depend on the kind of recoveries we see during the next 2 to 3 months. As of now, I'm pretty sure that we have more than sufficient provisions in place for MSME and two-wheeler divisions. Microfinance will probably need at least another quarter of provisioning, but let's see. But as of now, I don't think that I know or am comfortable providing very exact estimates on potential losses, except that I don't think it will be nearly as bad as last year.
Right. And overall, in terms of the three segments, that's MSME, two-wheelers, and microfinance, where are you seeing higher traction coming in terms of people coming to apply for loans versus the disbursements also that are going out?
No, I think there is certainly a lot of demand in both the MFI and the MSME segments. Given our very cautious approach, the rejection rates are also much, much higher than normal. And a lot of the CIBIL and the high mark, the credit bureau reports are showing overdues for a large swath of the potential customers, which we are rejecting. So potential, I think, for now remains higher in the MFI book in the short term. And by short term, I mean for the next 1 or 2 quarters, as we have a large number of old customers which have, proven themselves during Q1 during the first wave and the second wave. The MSME being a newer division doesn't have the larger renewal client base to fall back on. So that said, we are seeing increased volumes in both these segments, obviously. And the two-wheeler segment specifically was the most impacted in terms of AUM and saw the largest decline in the loan book. So the good news is that the sales have been picking up, but I think it will take a while for it to get back to what it was pre-COVID. I think fingers crossed that the festive season goes well.
Right. And with this, for how long do you think that we will continue, a cautious approach with regards to where disbursements go? Do you think we are still some time away from getting back to normalcy of how our approach was, say, back then in 2019?
I think, we've been very cautious as far as disbursement since last April. Most of last year, except the last quarter, we concentrated on renewal loans only. And as I said earlier, our efforts were definitely fruitful as the repayment rate of post-COVID disbursements has already reached 99% plus. So I think we'll continue to remain cautious, but from a strategic perspective, we want to grow. I don't think anticipating third wave or fourth wave or fifth wave or anything like that makes a lot of sense. Because the opportunity cost will continue remaining high, and whether third wave comes, doesn't come, whether it's serious, not serious, that is all a question mark. So I think that we need to move forward as carefully as possible as far as disbursements. Last quarter was only 122 crores. I think we are already, last month in July, we already reached about 85 crores in that month alone. And probably will wind up doing somewhere close to 275 crores this quarter. If all goes well, that will continue increasing from Q3 onwards.
Right. And in terms of geographies, are you seeing a specific trend?
So you mean in terms of disbursements or in terms of
disbursements as well as on the asset quality front?
So as far as the asset quality goes, yes, there are differences geography to geography, and it's almost correlated to the severity of the lockdowns between. It's kind of very interesting to see also. So last quarter, I think, or I keep saying quarter, excuse me. I mean first wave, Maharashtra was the worst impacted. Still after the second wave, it's the worst impacted. But it's funny to note that during the first wave, Gujarat was seeing the best performance in terms of repayment rate. That has been replaced by UP during the second wave. Rajasthan was performing extremely well during the first wave. During the second wave, they had one of the most severest lockdowns in Rajasthan, so that has gone down. MP has gone down. Haryana, which is a new place we moved in, is going up. In terms of disbursements, I don't think there is much of a difference. I think the demand is very strong in all the states. But from our own underwriting, we are being cautious in special, not state related, but at least branch related. In the ones which have a very high NPA, we are being very cautious and concentrating on the repayment side.
Right. And overall, in terms of where the cost of funds go, are we expected to remain at current levels for some time now? And are you expecting a change in the borrowing mix from here on?
So I think overall the cost of funds have come down quite a bit in the past 12 months. I think the repo rates and other rates have somewhat stabilized. So I don't expect to see a very drastic reduction. One exception, I guess, would be the credit guarantee scheme for MFIs. So with that, there is a chance for it to come down even further. But of course, when I get that credit guarantee scheme, I'll have to lend out that money at a cheaper rate as well. So I don't think it will make a material difference as far as the bottom line is concerned. Offshore NCDs, I think, have been reduced by about 50 to 75 bps. So overall, that might have an impact as well. I think the only difference in the product mix would be, the banks, especially the PSU banks, had been quite reluctant to lend money to the MFI space post the COVID, and now they are coming back, slowly. So I think that will change to an extent. But I don't see any major changes in the debt mix overall.
Right. And overall, with regards to expansion from here on, what's the plan? Are we looking at expansion in terms of geography? Are we looking to see expansion in terms of product mix? How is that expected to look like over the next 12 to 18 months?
So overall, I think, as I said, we have opened some 40 odd branches between the between last quarter and the early parts of the previous quarter. So maybe we might open another 10 or 15 odd more branches in the current year. All expansion plans were, of course, put on hold during the second wave. But mostly we are done. I think we have sufficient branches and sufficient expansion we have done geographically, both from a risk perspective and a potential perspective. One game changer that might come in would be the new RBI white paper. Now, I don't know if you are familiar with that, but basically that there is a proposal for changing the regulations for the NBFC MFIs. And in that, they are planning to bring all the practitioners on a level playing field, which is something that we have asked for a long time. The second advantage is that they have removed the margin caps. Okay. So I think if you look at the overall spread of microfinance in the country, maybe about 80% of the portfolio is in 30-40% of the districts. Large areas of the country are still have very low concentrations for whatever reason. The operating cost might be too high, the credit cost might be too high. All of a sudden, if I can account for those operating costs or those extra credit cost risk and price the product accordingly, I have a potential to expand into those areas as well. So I think it'll be interesting once these new regulations come up.
Right. And in terms of segments?
So in the short to medium term, I still see a larger potential in the MFI space, especially since the portfolio has shrunk over the last year. But in the long run, I think the group-based lending will probably slightly lose its flavor in replace for the individual side. So if you talk about 3 to 5 years down the road, I think the individual loans will have higher growth, and which is our MSME division basically, or even in the microfinance side, the individual loans are going to start getting more and more popular with the customer side.
Okay. And overall, very lastly, Aalok, in terms of FY22, what's the outlook looking like in terms of growth, and what's the next milestone that we're looking to cross in the next, say, 2 to 3 years?
Really, I think after the second wave, I've kind of given up on projections in general.
I know, I'm sure.
Every time you run the exercise, last year, Q4 of 2019, that went out the window, and then even in 2020, 21, whatever, it's been. I unfortunately don't have a long kind of projection for you. Once all of this is behind us, we are comfortable growing at least at a 40% CAGR for the next 3 to 5 years, at least. So that is what my answer is going to be. But overall, this year, we had a potential to reach at least 12 to 1300 crores. That was our original estimate. Obviously, with the second wave, that might come down, but for sure we'll cross 1,000 crores, no problem at all.
Absolutely. All right, Aalok, thank you so much for speaking to us at Nirmal Bang. Always a pleasure to get insights from you. Good luck for the coming quarters. Stay safe, and speak to you soon again.
Thank you so much.
Thank you.
Bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.